What is up, guys, and welcome back to my channel. My name is Prince and this is Trading with Prince. Here we talk about smart money concepts and institutional trading strategy. So today, guys, we're going to be talking about a very straightforward topic, or a topic I would actually want you guys to understand is sniper entries. Basically, sniper entries simply means, having better rewards, better entries, good risk to reward ratio, to actually make more money than you lose money, in this trading line, or in a line of occupation or something. You actually get more, you lose and you make money. It's every trader does that, but the thing is, how much do you lose compared to how much do you make? Or should I put it the other way around? How much do you make compared to how much do you lose? So you need to actually have to make more money than you lose. So every trader loses money. I don't know about some other professionals, but people I know, my friends, other traders, we also lose money, no matter how pro you are. So it's just to make sure that you have more wins than you lose. So one of the things that would actually help you gain more entries and more wins than losses is having a good idea of sniper entries. So before we start, guys, don't forget to like this video, subscribe, and push the notification bell. Then if you have any other video you would want me to make, do let me know in the comment section. Also join our Telegram group, and so you could get more updates on what's actually happening in the market. So let's dive right in, guys. So basically, to be able to identify your sniper entry, the first thing you need to know is your overall trend. As you can see, this is VIX 101S index. It's been quite on an uptrend for a very long time till it got to this place where it actually took a reversal. As you can see, I think I did this somewhere when the market was here. I wrote waiting for trend reversal. This was like, I think 2 weeks ago or so. So yeah, so when the trend reversed, the first thing you would actually look for is your general your overall direction. So from here, from this point, we can see that there has been a reverse in the market. So the market generally is beginning to sell. So the next thing we are looking for is BMS, that's break of market structure, and that happened somewhere around here. We had a break of market structure here. So after that, what's the next thing we're going to be looking for? Our trigger entries. We had a trigger entry here, which a lot of people who I believe a lot of people caught this. As you can see, these are actually double tops. I talked about double tops in my previous video, and double bottoms. So if you haven't seen that, please do go watch it, and so you actually understand what we are talking about. So yeah, this is actually a good trigger entry, and but if we are following what we actually, our format, our rules and regulations, would actually wait for this break of structure to happen, then start waiting for our trigger entry, which actually happened somewhere here. So as you can see, the source was retested. If you haven't seen my video on trading other blocks, you should also go watch that as well. The source was retested, and it gave birth to a very strong, downtrend. Now this is your snapper entry. How do you enter trades like this? You just go, it's either you have you do market execution, you enter in real time, you just sell the market probably on lower time frames or something, or you put pending orders, stop limits, or stop, or either you put market execution sorry guys, you put market execution, or you put pending orders, to help you catch these entries swiftly. You know, these are things you need to consider before you can actually have a very good sniper entry. And as I said before, or as I once said, these are my views on trading. So personally, I would actually leave this market somewhere here. You know, the market never ends, so you don't need to be so greedy. Somewhere here, if I'm looking at this from a higher time frame, and I go, for instance, I go to M15, you can see how many pips we cut all the way from where is this thing? Okay, you entered somewhere here, and this is good money, guys. You know, this is good money. So we are never stingy. Okay, you trade what you see and not what you know. You need to learn that rule. So this is a very good example of a sniper entry. So as you can see, the market went down, was ranging, it went up, it came, we tested this source right here. Market retested this source right here. So this is a very good entry point. And depending on how you're looking at it, most people would actually live here. Most people could actually still live here. You know, it depends on how you trade. You know, you use proper risk management. You know, guys, I would actually put my stop loss above here. You know, if eventually, for instance, I see something like this and the market comes somewhere here and goes back up. Let's see, it goes back up here. It's definitely going to hit me out because most likely the market is chasing this point. Do you understand? So what you do is just, it happens, things like this happen. That's why you have to use proper risk management. Most likely it's going to chase that and back. So let me put this together so you get what I'm saying. Yeah, so it just comes back down. So all you do is just re-enter the market through maybe market execution or your pending orders, depending on how you trade. You know, people have different preferences on how they trade. So let's check something else. Okay, look at this. This is jump 100. Jump 100. We had, what do we have in our? So the market is actually on an uptrend from this point. You need to also know that there's a difference between what the market is doing generally in the higher time frames and what the market is doing in lower time frames. There's a difference between what the market is meant to do and what the market is doing now. These are things you need to consider when checking out your sniper entries. So yeah, back to this. So at this point we had the first retest. We tested this, as you can see I wrote here, retest of the breaker. So we had the first retest, came up, the second retest, the third retest, which we are expecting to actually break this correction, because this right here is I would actually call this whole thing right here now a correction, or I could call it, most people call it consolidation, depending on what you want to call it. So yeah, this is another angle we could actually look at as well. The market was on an uptrend, on a downtrend, sorry. Then it had a reversal here. It went up. This was October 29th. So it actually went all the way up till had its reversal to November 16th, and that was actually where this was tested. You know, patience game, as I always mention. So now it's back up again. So if you actually caught this would have actually been very good, because if you enter this market right here, as you can see, the market is on an uptrend. It's definitely going to have a correction where orders are being stacked. You know, that is a whole different topic on its own that we are going to talk about one day, how the market is being controlled, who is controlling the market, and how it's being done, how most of these charts you're seeing are being predetermined before it actually happens. So this is actually where orders are being stacked. Orders are being stacked here. You could call them corrections, you could call them consolidations. So it's either you entered here, maybe you go down to your lower time frame and find an accurate entry, or you actually just enter from here. But it depends on the kind of trader you are. If you are if you are a beginner, a trader that's just starting out, I suggest you take it easy. And also I would also advise you go for pairs that are less volatile than the rest, because most times these trades, yes, they actually give good money, but they can actually also take good money from you if you're not careful. If you don't use proper risk management, you could be right. You could actually identify your breakers, your sources, your order blocks, your BMS, but you still get kicked off. Why? Because you are not using proper risk management. So guys, the aim is to make more money than we lose more money. So these are things you need to consider. So as I said, a quick recap. For sniper entries, the first thing you need to identify is your general trend. For instance, I'm trying to use this as a general illustration. You identify a general trend. This was a reverse. We had this here. Then after that, the next thing you identify is your break of structure. We had a break of structure here. Then the next thing you need to do is find your trigger entries, which is basically the retest of, since it's on a downtrend, it is going to be a retest of your source, which happened down here. As I mentioned earlier, if you haven't seen my video on trading order blocks, I think you should go see that to actually understand what I'm talking about. So yeah, it retested the source here. Then depends on your risk management level, you enter the market, and yeah, you have your downtrend. Either you enter the market on market execution, or you enter the market on pending orders. So guys, that's it for today. Don't forget to like, subscribe, and push the notification bell. We have a Telegram group which I advise you join, or I would like you to join. The link will be on the description below. Then if you want me to make any video, if you have any suggestions, if you have anything you want to communicate with me, yeah, you could just drop that in the comment section. Okay, don't forget to like, subscribe, and push the notification bell. Adios guys, see you in my next video.